This is Sovrun, your guide to financial literacy. Today we're breaking down the one ratio that separates crypto hype from real value. Bitcoin peaked above $120,000, then crashed back to $65,000. But here's what nobody talked about. Was the network ever being used enough to justify that price? There's a single number that tells you the NVT ratio. The NVT ratio compares how much a crypto network is worth to how much money actually flows through it every day. Think of two restaurants, both valued at $1 million. One serves 500 customers a day. The other, 50. Which one is overpriced? The NVT ratio checks how many customers are actually walking through the door before you trust the price tag. Here's the formula. NVT ratio equals network value divided by daily on-chain transaction volume. Let's run through it with Bitcoin. First, take the market cap, $1.8 trillion. Next, the daily on-chain volume, 12 billion. Now divide. 1.8 trillion divided by 12 billion gives us 150. That means Bitcoin's network is valued at 150 times what flows through it in a single day. So how does that compare? BTC sits at about 150. ETH is around 45. SOL comes in at just 18. And back at Bitcoin's 2017 peak, the NVT hit 300. Anything above 100 is a warning sign. And below 50 usually means healthy usage. In December 2017, Bitcoin surged to nearly $20,000. The NVT ratio spiked above 300, triple its historical average. Analyst Willy Woo flagged it as a clear bubble signal. Within weeks, Bitcoin crashed over 65% to $6,000. The same pattern repeated in 2021. When Bitcoin hit 69,000 with an NVT above 250 before dropping 75%. Now here's a common trap. Many people confuse exchange trading volume with on-chain volume. Exchange volume includes speculation and wash trading. NVT uses on-chain transfers, actual value moving on the blockchain. Remember, when a crypto's NVT spikes above its historical average, price has outrun usage and corrections tend to follow. This value versus usage idea shows up everywhere. Social media platforms are valued against daily active users. Cities measure infrastructure spending against traffic volume. And e-commerce marketplaces are judged by gross merchandise volume. Follow Sovrun for more financial insights.